Welcome to nasscom Insights next edition of Analyst Assemble. The announcements of the Q2FY24 financial results of the listed tech companies is just around the corner. We thought this is the right time to talk to analysts for tracking the industry growth and learn from them what they foresee in the Q2 results and also their analysis and outlook for the next year. Today I have with me Ravi Menon, who is the lead analyst at Macquarie's Capital, covering India IT services and technology sectors. Thank you, Ravi, for taking time out to talk to us, and
Thank you
welcome
for
to this
having me,
session.
Nirmala.
Thank
Thank you for Nirmala.
Thank you. So we'll quickly start with the questions. First and foremost, what we are seeing is there is some improvement in US macro indicators. For instance, we are seeing some lower inflation, better GDP, and rising expectation of dodging a recession. So what is your take on the same, and what does this translate to for Indian IT firms, specifically the players that we track, and in the near term and for FY24?
Thanks, Nirmala. I think it's an interesting question. Last year, I think people were worried that spending will be cut back quite significantly, and people were expecting a US recession. Even now, we still have an India recession, and our strategist Victor Schwetz, he thinks that now he's always been in the inflationist transitory camp, and he thinks that we will most likely get a soft landing. And he does think that risk-free rates are likely to head lower. So we think spending will recover. Right now, I think it's just the uncertainty that's keeping people from spending. We are hearing of sales activity that's at fairly record levels. People are busy. There are a lot of conversations going on, and that's usually good news because usually such engagement by clients should mean that deals will follow. So we are still hopeful about good growth resuming in FY25 and beyond.
Just related to that, we have seen in terms of the deal momentum, we have seen an uptick in mega deal signings, and especially from the Indian top companies. We have also seen momentum in large cost takeout deals across the industry. So, what is your conversations with the players? Specifically saying, will this continue? When do you see transformational deals picking up? We know that last few quarters we have seen a lot of cost takeouts, right? So what is this? How is this shift going to happen? And also, is there any take on short duration transformation deals in the coming quarters? And any specific deals that you would like to mention, which is creating a larger impact for the year?
Come to the second part first. I think the Infosys Liberty deal and HCL's deal with Verizon. I think those two are standout deals that will actually have an impact. Probably towards the second half of the year, though, may not be for this quarter, but more for the Q3 and Q4 of this year. And that, of course, sets them up fairly well for next year as well. And we are seeing a mix of cost takeout plus transformation, where clients want to do cost takeout to fund transformation. So I think we will see more deals of that type come out now, and that will get awarded between now. So the next 12, 18 months, I think we'll see more of these kind of deals where you have a mix of cost takeout plus transformation.
How will this translate for our Indian tech industry? Anything that you have analyzed, the amount of growth that it can lead to?
Double-digit growth, is possible again for most players next year in FY25 and FY26.
Okay.
Yes.
You don't see that happening in FY24?
No, FY24, I think, the uncertainty continues. And actually, large deals are getting awarded now. But the problem is, like what you said, the shorter duration deals, the discretionary spending is getting curtailed. And because of that, many programs, as they keep coming to an end, you have that constant headwind of revenue every quarter, every month that we're coming up against. And that's why, despite large deal wins this year, especially I think calendar year 23 overall, we saw that start out. I mean, even Jan, Feb, March was not great. March, we had a Silicon Valley Bank bankruptcy that caused a lot of uncertainty. So we thought that that'll be over by June, and but by June, I think there was again worry about a US recession, whether the Feds will hike rates again. and how much will they hike? So I think people prefer to just wait for one more Fed meeting, and now it looks like that's just got postponed to November. So we are still waiting for that last rate hike, and I think that's what's causing this uncertainty in spend.
Right, agree completely. And since you talked about spend, we also, so do you see any visible signs of recovery or improvement in the enterprise tech spend? This is in the near term or for FY24, and any specific sectors or geographies that we should watch out for, specifically maybe in terms of both weaknesses and strengths. North America is our largest market, so anything that you can share your thoughts on?
Near term, I think the US remains weak, but I think I wouldn't call that a structural problem. I think that's just the uncertainty. Europe and UK continue to do well from what we hear, and next year too, I think that will continue. Uh, and in terms of sectors, I heard that refining is starting to pick up. I mean, it's a really small sub-segment, you can say, but at least in that segment, we're starting to hear people are willing to spend, and clients are not looking at cost takeout, but they really want transformation programs. Uh, so we should see, I think, that come through into other segments as well. And in ER&D, we are hearing a lot more engagement around IoT and setting up private networks in factories for 5G. And I think that's happening and data is getting gathered. I think the next phase will be real-time visibility in supply chain. So we should see some IT programs around real-time supply chain visibility. So that will be a multi-year project, because it'll be in multi-country rollouts, adoption of SAP HANA, all that. So I think that can be a really good growth driver for multiple years. And we are still in early stages of that.
BFSI is one of our core sectors, so that was weak in the last 2 quarters. Then, so how do you see that panning out?
I think BFSI should recover. I think that especially, people have been worried about whether they need to, factor in rising delinquencies or, and there is, I think, up to a stage where the rising interest rates are helpful to the banks. And then beyond that, I think, it starts becoming a problem for them. So I think that's what they're worried about, whether, loss ratios will go up. So I think that's what they've been cautious about spending. And the larger banks, I think, have been reporting good results, but despite that, we've actually not been seeing spending pickup. We are hearing that the hardware firms are generally, all managements are saying, for a Taiwan team, they're saying that calendar year 24, we will actually see things really pick up and spending should resume. So, and if hardware spending is starting to pick up, we think services spending should also pick up.
So maybe by around the last quarter, it could start showing some signs of recovery.
Correct. The last quarter of this fiscal, we think we should start seeing some signs of recovery. And we also heard that consulting is starting to see some bit of traction again in the US. So, not a huge, but a slight pickup is starting to happen.
Can you say you also give an example of refining coming into the picture right now? Any specific examples that you have seen, any deals that have been signed that you're talking about this?
No, I mean, I have just heard this from salespeople that there is activity, and that deals are very likely, and even shorter duration deals are likely to be signed, in the coming months.
Great. So my next question is around Gen AI. So last week we released a report with McKinsey, which highlighted the potential impact of Gen AI on technology services sector. So just wanted to pick your, hear from you during your conversations that have you had any talk about companies investing in Gen AI, how that's going to transform the industry, any larger impact that you're going to see in the short term and the long term, both in for the industry and for the enterprises. So anything around that?
I think everyone thinks that this will improve productivity. I think there is a lot of debate about how much. In fact, Macquarie internally, we have used Gen AI in some pilots, and our experience with using Copilot, according to our COO, is approximately 10%, which is which is good, but I think it is not, it is not that disruptive as people thought. I mean, I think we had estimates of people talking about, even 25, 30%. And 10% is not actually very different from the usual productivity improvements of 3 to 5% that the industry is used to giving in contracts anyway. So I think this is something, and of course, this is applicable only to a certain proportion of very specific jobs, right? So
Yeah.
I don't think of this as something that will disrupt the industry overnight. There is some productivity benefit, but I think of it as something that really shifts the cost curve downward and
Yeah.
then unlocks new demand. So I think net, as long as the companies are nimble enough to adapt their pricing to the productivity improvement and pass that on to clients, I do
Mhm.
not foresee a problem.
Okay.
Uh, we cannot, of course, retain the margins. This is a hyper competitive industry, very
Yeah.
fragmented.
Correct.
So I don't think any provider will be foolish enough to try to hold on to those productivity gains. You have to pass it on to the
Yeah.
customer.
Right. But any conversations with clients that you have had where they are saying that this is going to be a game changer, or what companies, our service providers are looking at in terms of providing them? So one is of course about productivity and efficiency, but anything else that stands out in terms of efficient takeouts for the companies?
I think some of my clients have been very nervous about this because they think that it is still early to gauge the impact, the potential impact. And I agree. I mean, it is probably still early to gauge the impact. But what we've seen so far is that this is not going to disrupt things overnight. So yeah, I think if it
Too
remains,
early to say. Yeah,
yeah, it
maybe.
remains fairly. If it is just evolutionary rather than evolutionary, I think
Mm.
they will have time to adapt. And I think the fear initially had been that this is happening too quickly. Now, at least we think that it is good for boilerplate stuff. It actually is good for improving efficiency, but creating actually new, I'd say, opportunities as well when it does that. I mean, I was just reading today that Genpact, for example, talked about an example where they were creating a report comparing pricing, I think, and demand across different automotive models, which was a weekly report. I mean, and now they can do it on a daily basis because of GenAI. So I think those kind of examples show that there is more uh, demand that will come up if you can actually deliver this at a lower cost. I mean, so this is the classic that what we talked of how new demand comes up and actually takes up those improved productivity, so that we are not really talking about loss of jobs, but uh, that there is less repetitive clerical nature of jobs.
Agree. And the use cases that come up is really very interesting that companies look at. So one of my question, my last question is around the outlook for the industry. So considering the current demand scenario and the macro environment, what would be your prediction for Q2 and FY24 in terms of revenue growth for the industry? And also we have seen hiring stabilizing this year. So attrition also has become down a lot. So any trends that you would like to call out in terms of hiring outlook, and any other specific details that you have?
I think companies are starting to onboard fresh graduates again. I think that there was a bit of a delay with many firms because people were carrying more bench than they thought because attrition came off, well, I think quicker than people expected. And the demand environment also took a U-turn that was not expected. And it's lasted. I mean, the slowdown we thought would last a few months. Now it looks like it might last, 6 to 9 months. So I think that's forcing firms to recalibrate hiring. But I think you will still see, hiring really pick up towards the next calendar year. With demand comes up, people actually will see that, and I think they lacked a few months before that. So I think as uh, you see the deal pipeline still be strong, companies will start hiring. I think we
Mhm.
will start seeing hiring happen even in Q3. And I think Q4, we should really start seeing much stronger signs emerge.
And what about revenue? Any thoughts around what is your projections or predictions for Q2 and FY24 in terms of revenue growth? Do you see the double-digit growth that we had last year, not last year, previous year, that coming back? When do you see that happening? Any signs of
I
that
think for
kind of
the
growth?
Right. I think for the larger firms, FY25 is, I think, when we will get back to double-digit growth. Most of the mid
Yeah.
caps, I think, should be able to do double-digit growth even in FY24. Q2, specifically, we are looking at a range, except for Wipro, where there is effectively a marginal decline, and that the management has called out is due to their higher exposure to consulting, which is early cycle. Most other firms we expect will have marginally positive growth quarter on quarter, ranging from 0.7, 0.6% to at the top end, 4% for Coforge.
And
That's where we
FY,
see it.
okay, FY24, how do you see that growing? Any
We are
because the
looking
first
at
2 quarters were when you see first quarter was pretty low. So how does the next few quarters look?
we are looking at negative growth for only two firms in our coverage for FY24. That is Tech Mahindra and Emphasis. All other firms we think will do mid-single digit or better. We are actually looking at a couple, two or three firms, go above that in the mid caps. So you have Persistent Systems, Coforge, and LTTS all doing, 10 to 15% growth over FY24.
So, just to wrap up, any last thoughts or anything that you have seen in the last few months that can be apart from Gen AI that we keep hearing and talking so much about? Any kind of a marked difference or something that can disrupt the whole industry that you stand, or maybe macro or unrelated to tech, but anything that you would want to talk about?
I think that there is this worry that if the Feds continue to keep the rates high, the US
Mm-hmm.
might go into a deeper recession than we expect. I think that
Okay.
is a risk,
Okay.
but that is more like an FY25 risk.
Mm-hmm.
That happens, and if that happens, we can't be sure. How the industry, and we have typically benefited during downturns. I mean, there is a lot of cost pressure. Actually, there is there is more adoption of offshore, and
Yes.
we've always gained. But near
Yes.
term, it has been a problem. So we could have a couple of turbulent quarters if the US does go into a recession. So I think that's the biggest risk in my mind.
Worry. That's a worry. Yeah. Anything positive that you would like to highlight?
Positive, yeah, actually, that's true. I think
Yeah.
that we are looking at large deals where I think pretty much Indian players are competing with Accenture of the world. I think in almost every deal we are hearing of two or three Indian players with one MNC in the mix, and typically that's Accenture. So I think that's a big change compared to 5 or 10 years back when the Indian firms were still challengers, and maybe we would hear of one firm probably among the MNCs out. Now the others are actually dominating the large deals market. I think that's different and that's new.
That's a one big positive for us. Yes. Thank you, Ravi, once again for sharing your insights with us. We will keep in touch and continue with these conversations. With that, we come to the end of this session. Do share your feedback with us. Don't forget to subscribe to our YouTube channel and community portal for more such insightful sessions. Thank you and take care.